Hey, good morning. It's Monday, March 18th, 2019. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term. Never risk money you cannot afford to lose. Let's go! Bum, bum, bum. Hey, good morning. Guess we'll do some gold, some oil, dollar, yen. Take some Q&A, call in today. What do you stink? Smell like a plan? Hello, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here this morning. Oh, it's early. It's not that early, but it feels early. I don't know. Is it Monday already or Friday? Is it Friday? No, it's only Monday. That's good. Hey, I think we got some Fed stuff this week and all that kind of thing. Makes it interesting, right? Nice. So anyways, hey, I know a little bit about technical analysis. I know a little bit about fundamental analysis. I've been around, so I've learned a few things up here, good, bad, and ugly. I'm willing to share all of this with you with the overriding goal of helping you become a better currency trader. Setting up trade plans in advance, using strategy, and then with technical analysis, tactically entering into those trade plans. Once you develop these skills, you take control of your trading, you will start to see consistency. And then over time, develop confidence. Once you get to that level and you're ready to trade real money, I hope you pay it back. That this service was offered to you free up front. I hope you pay it back and visit TradersWay.com and open up a trading account there and fund it with real money and trade with them live. They can be the prime broker to your successful Forex trading business, but it all started right here. So that's the grand plan. So make sure you put that down. Step 1, control. Step 2, consistency. Step 3, confidence. Step 4, open up Traders Way account funded with real money. Step 5, profit, 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 profit. Anyways, that is the plan. So hopefully you follow the plan. So wasabi! Wasabi! Oh, you love the daily handshake? Yeah. Well, I'm really interested for us to get together. I used to get together with boot campers, FX boot campers, once or twice a year, and I'm really missing it. I don't have time. I don't have time, and that's probably why I'm missing it, right? Everybody wants what they can't have. I don't have time, but I sure would like to meet up with you guys somewhere, right? Hong Kong, London, somewhere. Should all meet up for scotch and cigars, something like that. Port wine and cigars. So anyways, that's on my emotional list. So without further ado, let's take a look at the world through the lens of charts. This is WTI. Oh, I forgot to get my drawing tool going. It's WTI. Now, I like to start with WTI because, again, I'm a trend trader. To be a successful trend trader, in my humble opinion, in the currency markets, you have to understand macroeconomics. Macroeconomics can influence the price of West Texas Intermediate crude and Brent, probably even more than Brent, but Brent even more than WTI. But anyways, this is American oil. So anyways, we can look at this. Remember how we were in this range? And I told you that it was going to stay in the range forever and ever 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 until it breaks. Do you remember what to do after it does, in fact, break? What's the next step? Trade the pullback. So this used to be resistance. Now it's support. All right. So now it's the planned stand. Dip, 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 dip. Right. Trade the dip. Dip, 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 dip. Right? Don't you just get all giddy when you see that? You're like, yes! Yes! Well, that's what you're supposed to be doing. That's what it feels like when you put together a trade plan. Yes! Nailed it! It should, though. Like, seriously, like, oh, yeah. So, scrunching down, there's the weekly swing. Whoop, whoop, Friday front run. Whoop, whoop, Friday front run. Right? Friday front run off the weekly central pivot point, which is always plan A. Oops, that was supposed to be a pen. Plan A. Plan B is here, the confluence of monthly and the weekly M3. So this is plan B. That's it. That's how you do a weekly swing trade. Okay, and where are bears going to sell? Who's going to destroy this beautiful trade? Well, they're hiding right here. They're hiding in the bushes. They're hiding in the trees. So they're going to look at this, they're going to look at this, they're going to look at this, and it's going to be here, here, here. Okay? And they're out to destroy our beautiful trade plan. Okay? Cash says the break has to have follow through. Yeah, but if you wait for it to already break, then you've missed it. So the break was actually here. Okay, don't wait for the break here, right? So once you get the break here, you start to look for entries here and here, and off you go. And you wouldn't buy here, but maybe in a week you'd be buying at the same price on that rule reversal. So ultimately what we're looking at is over and over and over again. So we just had a breakout, and then this is the buy, right? This is a breakout, this is the buy. Okay. Okay. Now Guy is talking about OPEC, and I'll preface this last break. The week of the break, I discussed with you Saudi Arabia. There was rumors of Saudi Arabia, or reports of Saudi Arabia cutting from 11 million barrels per day, per day, down to as low as 7. Like a lot, huge cuts. We talked about it. I created supply and demand charts. I said oil prices were likely to go up, blah, 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 but we were here, and then we were here, and then we were here, and now we're here. Cool. Now, I also remember talking about how to range trade, that you believe it stays in the range forever, but at one point it's going to break, and you look for that, or you look for this, and there's And that's how you trade it. Then we got the fundamental news that there'd be less supply, which would increase prices. Then prices went up, then it broke. Then it's done a role reversal. Now it could collapse on you, come back down here, and then go up. That's fine too. This is only plan A. What you might want to do is, if you're in plan A, leave plan A, put the stop down here, because when you buy it, well, whether you buy at central pivot point or M2 in this case, your stop should be just below the S1. So if you buy it here, you're aggressive, but you take on more risk. If you buy it here, you were more conservative, more patient, got a better price, but your stop's still the same, so it's risking less. Either way, your stop should be here. Because very often, not very often, often, you can see you'll see things like a quick dip below, right? Almost to the support and then back up for various reasons. And that's usually because you're missing a monthly cluster, right? You'll miss a monthly cluster where you might be looking at weekly pivot points, but if you overlapped the monthly, you'd see that there was a monthly nearby. So we call that an Arctic turtle, where the market stretches to get to the monthly and it pops back into the weekly, or vice versa, depending on the situation. But either way, you want the support pivot to protect you. Because you know nobody's going to sell at support, right? No. Well, first of all, what about OPEC report saying that Q2 is low in demand and then cutting? Well, okay, so now it's going to be relative, right? But typically demand, how do you say it? Demand has a different elasticity of price. Yeah. So what does this mean? Demand moves up and down like this, and supply moves up and down like this, right? So if there's a change in demand, so your demand curve is down, right? Demand can flatten, but it won't be as dramatic and as quick as supply changes. So demand is created by, let's say, global need for energy or global need for plastics and such, right? Just a global need, but it's not even one market, right? Because what do you make out of oil, right? Gasoline, jet fuel, tar, fertilizer, plastic, makeup, and then the plastics make everything, right? So there isn't one market. It's great. It's the demand of everything. It's a true aggregate of global demand. And that doesn't shift up and down very much, and it certainly doesn't do it very quickly. Today's demand is going to be like yesterday's demand and tomorrow's demand, and there isn't really one or two organizations around the world that can control it. Demand is demand is demand is demand. Supply, Saudi Arabia can just turn a wheel, and the supply goes, right? And that's that. Boom. And it can happen today. And it can be one person's decision. You know what? To cut the oil. I don't know who that is, but anyways, hey, cut up the oil. Cut it down. Cut the oil. Right? And it's done. So there's a difference between the two is all I'm getting at, right? So what I do mentally, and it's not perfect, I make everything short run. So you got your demand curve. And you got your supply curve. Okay, this isn't precise, but there's a difference between long run. Okay, these are economic terms, by the way, and short run. Each would have their different actual equations, different models, all this kind of stuff, right? They are different. So if you were taking an exam, they'd say, well, in the short run, that moves you to a whole different math. If the test question was, in the long run, blah 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 blah, boom, you do different math. So I tend to isolate as a trader everything into the short run, because the short run doesn't mean 5 minutes; it could be 5 months. Okay, and the difference between short run and long run is you make something constant. Something can't change. So I'm going to say demand won't change in the short run, but supply can. And supply can go up and down every day, right? But an example of it is, let's say you wanted to add more oil. Prices went up because supply is low. Well, how did supply drop? Well, some wells went dry. All right, well, give me a new well. So how long does it take you to add more wells? Let's say you even know where the oil is. You've already done all the prospecting, right? So, right, you've done all the geological surveys. You know where you want to tap. You got little X's on your map. Good. How long does it take to get oil out of the ground? Like 2 years. So short run could be as much as 24 months. Okay. So I look at things shorter run because we're traders, and what are we trading? Daily charts, 4-hour charts? We're thinking about like what's going to happen next week for oil prices. We're not necessarily making investments thinking about oil prices 25 months from now, right? As a starting point. So that's where I get into that. Like, and this goes to a question somebody asked, and I'm sorry I forgot who. Something about OPEC said this, and this other thing happened, and there's a demand equation and there's a supply equation. Why don't they offset each other? And what I'm getting to is one is more of a long run, and the other is more of a short run. And the math on A doesn't help you solve the math on B, and they're not. How do you say? They're mutually exclusive, something like that. So they don't equal necessarily, right? So you can't take one report that's long run, apply it to your short run, and come out with an equation that balances or equates. Okay. Joe says stock market keeps rallying. Well, there's something to be said about money not getting more expensive. Okay. I was looking at something, I think it was in Barron's magazine this weekend, and they were saying how 6 months ago, shows you how retarded our market is. Anyway, 6 months ago, it was a 90% chance that they would be raising interest rates beyond 2020, right? And now it's 0%. They went from 90% to 0%. So there's our market for you, by the way, guys. Like, what are you talking about? And this is sort of a problem with a new leader at the Fed. And we've kind of seen this in the past, or at least I've been around long enough, I've seen it in the past, where your first year or two, Fed chairs make mistakes. Right? And Jerome Powell's no exception, right? We're going to hike, we're going to hike, we're going to hike, we're going to hike, we're going to hike. Holy crap, we're not going to hike anymore. Like, what? In how quick did that happen? In a 10-day period? For the first 10 months, he's like, we're going to hike forever and nothing's going to stop us. And then all of a sudden, 10 days later, that's it. We're never going to hike again, right? Just like, wow. And that throws the market for a loop. But dude, investors are addicted to cheap money. Well, is that a bad thing? Like when you read that in the newspaper, it's like, it's Elizabeth Warren blaming Wall Street for, poverty in America. A little bit of a stretch. Is there income inequality? Yeah, sure. But of course, when your $8 million apartment is 1,000 square feet, you kind of need to earn more money, and New York City perpetuates itself and stuff. There are plenty of scumbags on Wall Street, but there's plenty of scumbags in Washington as well. And none of them really directly create, but anyways. Going back to it, cheap money. Well, what if you're developing, you build orphanages, and you have a halo around your head. You're not even doing it for profit. You're just a wonderful, wonderful human being. Do you want to pay a lot for your financing, or do you want to pay a little for your financing? Just comes down to it. So whether you're financing the building of orphanages, skyscrapers, a car, or your currency trades, financing is financing is financing. Do you want to pay a big spread or a little spread? Right? Right, Joe? You see what I say? Like, it's like, oh, Joe, man, you're addicted to the low spreads of Trader's Way. You're addicted, man. Right? So I'm like, no, I just prefer to pay less if I can get the same thing, right? So anyways, whatever. Hey, I found a car, by the way. Never thought about it. I found a car. BMW had one laying around. Maserati. Does anybody know anything about a Maserati? Damn, nice car. So like I don't really own a car, but what I need one that'll hold golf clubs. I have kids now that don't sit in car seats, so I need a 4-door. And then it's got to be, if I owned a car, it should be wicked awesome, right? And it was really interesting. Never drove one before, but what a nice car. Big 4-door. And the trunk was just narrow enough to get clubs in if you take your drivers out of your bag and stuff. But it was really deep. Like, you could put a lot of suitcases in this car. I'm like, this is a really practical family car. But I don't know anything about them. The Ghibli. Maserati Ghibli, like a terrible name. Oh, but the exhaust on this thing with the Ferrari engine, holy crap. You start it up, you're like, that's a Ferrari. Oh my God. So it's basically a Porsche Panamera, but Maserati. Better looking than a Panamera, so anyways. I wasn't sure if anybody knew anything about them. Nope. All right. I'll Google it. Yeah, well, so is Ferrari. I mean, but are they like a Fiat? No. I mean, I don't know what a Fiat is. I haven't seen a Fiat since 1972. But yeah, it was an impressive car. Is it? Is that right, Ron? See, that was the thing I was worried about. Yeah, I was worried about that. Yeah, I was worried, like, I mean, German cars, man. The motor, like the engine and the tranny is great, But it was weird, like that AMG I owned. It was a beautiful handmade car, and then some of the parts were like the cheapest plastic you could possibly build a car out of, and they broke. So there was like 1,000 pieces because the roof would open up, and then the trunk would open, and the roof would go inside the trunk, and then the trunk would close, right? All backwards, right? It was really cool. And they're like, yeah, let's use cheap plastic on those parts. Like, I couldn't believe it, right? So it was that kind of stuff like that would break. But the AMG engine and the tranny and stuff was amazing. And now I'm really worried though. Like, I imagine that Maserati is basically a hand-built car, so everything on it's going to break. But what about the Ferrari engine? Is it going to be like $20,000 to get a tune-up, like a Ferrari? In that case, I'd go with the Panamera. Because the Panamera, you could probably drive 100,000 miles on it and not even do a tune-up. Oh, is that right? Your buddy owns one, right? And he loves it. Yeah. I was really impressed. I'm like, for a family car, baller. Yeah. So anyways. Yeah, well, that was one of the things I liked about it, Joe, is that there's not a whole lot of them. So I asked BMW, I'm like, are you going to do the maintenance on this thing? They're like, no. So I'm like, really? So it's that kind of thing. It seems like a pain in the ass, but maybe, I don't know. All right, so here's the beast. You working on your day trades? Well, one thing to kind of look at, right, when you're doing your observations, are we trending? Not for a while, actually, huh? Oh, where'd my mouse go? Not for a while. But I wouldn't be a seller here. So it's an R1 S1 day, but you look at this, and what you should be thinking about before this is, where are we going for the week? Where are we going for the month? Remember, some people, all they do is day trade, and they don't look at weekly and monthly, and they're missing out. They're really missing out. So let's just put this in our brain that we just bounced off of obvious support. Clearly a buy zone. Does it fit in anything else? Well, let's change the template. Okay. Where are we going for the week? Undefined. Where are we going for the month? Undefined. It's not a good trade to be on. That's it. Find something else. How about gold double bottom, higher high, higher low, higher high, higher low, and now what? Okay, well, if you're a bull, this is your zone. Okay, and if you are a bear, this is your zone. But I believe I told you this last week. So nothing's changed, which means there's no new buyers, no new sellers. But if you're following your trade plan, right, you can see like even Friday, that was a great buy. And Friday and today it was a great sell. Nothing new has happened. If it dropped back here, I might try it again. But the problem is the first trade plan was this idea here. Up, higher high, higher low, higher high, right? That's the first trade plan that we had from this double bottom, right? So what if it drops down here first? Hey, it's still above this line. Do I buy it again? Well, that wasn't the first trade plan. You know what I mean? Like, I didn't say have it come up and have it make 100% retracement from this to this. So it might just be, if you're a bull, stay patient, because I'm sure you bought this last week. Okay. So wait. Now bears, if you missed it Friday, you got to take it today. If you don't take this, bears, it ain't going to happen for you. Bulls are going to take over and wipe you off the face of the earth. Or at least we're going to go here. Let's just agree to that. If bears don't sell here, and I mean here, like essentially the price we're at now. If bears don't start selling this, we're going to be here probably by Wednesday. Okay. And then if that happens, where are we going to buy gold again? Probably around Friday, we're going to buy it again at this price. Okay. If you're a bull, that's what you're stinking. Well, I could remember I laughed at the NFP number when it came out, so I don't believe it. Yeah, Kron, I don't believe so. I don't believe they overlap. I don't think they work together at this point. Standing in line at the employment line. Heavy load. All right, here we go. Let's take a look on a 4-hour. So this one had the big flip. Remember, we had a plan A sell here. We had a plan B sell here. Okay. So in my situation, I tell myself the market doesn't tend to reverse like a V. That looks like a V-shaped reversal to me. It happens, but it's uncommon. So if I took a shot here and I took a shot here, I don't really see the entries, but let's say you did it anyways. I console myself saying that typically doesn't happen. It happens a lot in this situation, but I've definitely seen it before, but I tell myself it doesn't exist. Okay. We're more concerned about the boring average market. Does smart money not believe it as well? Well, anyone can believe anything they want. So how about this? For the last 7 years, we've been averaging, let's say, 200,000 jobs for 7 years over a monthly period, right? I mean, we can change this. Probably for 100 months, we've averaged at least 200,000. And then last month it came out 20. And just before that, we had a government shutdown. Do I believe it? It's definitely an outlier. See what I mean? It's definitely an outlier, so I don't have to believe it. Hey, thank you for subscribing. Welcome to the family. So anyways, it puts me in a funny situation because I don't like buying into a drop like this. And if I did, it would be this, right? It'd be here. And what does my training tell you? If you've taken like the swing trading course, and we hit this, and I've talked about it a few times, so we'll just do it quickly, but what's supposed to happen if you hit this on the 7th day of the period, of the monthly period? What have I taught you to expect to happen in that scenario? Come on, guys. Whoever's taking the swing trading course, what did you learn if you hit that M1 on the 7th day of the month? Raymond says back to the central pivot point. Anybody else? Elizabeth, back to the pivot point. Anybody else? Yeah, back to the monthly. Counter trend back to the pivot point. Come back to the pivot. Yep. Okay, so correct. We anticipate it coming back to this price. Now, what is that true if we hit it on the 21st of the month? Is the same assumption true? Target is not M3, Renee. Raymond says no. Ron says no. Chow says not really. Correct. So if you haven't taken the swing trading course, guys, it's that specific where if it happens on this day, you believe it's going to go back to this line. If it happens this day, you don't believe it's going to go back to the line. Or all the way through. You know what I mean? So there's some specific scenarios that you need to be enlightened upon. Okay. If it happens more like the 21st, you do not expect it to go back to the central pivot point. Oops. Where'd it go? Gee whiz, I'm not clicking the right buttons today. There we go. USD CAD. How's that for a counter trend? Hasn't made itself to the central pivot yet. That's quite a move, huh? Now, one of the things we talked about, I guess it was a week ago. Thanks for subscribing. Welcome, Linda. One of the things we talked, remember we were here, and that's where the Saudi Arabia 11 million barrels a day down to 7 million barrels a day. And I said in that situation, CAD would probably get strong. And this is where I did this, the supply and demand curve shifting and price going up. Remember all that? And then we talked about the correlation, and it would favor Canada and Norway and all these different things, right? We lined up who all the exporters of oil were: Canada, Norway, Venezuela, United States, right? We started lining up all these different things. Well, it's moved, right? Yes, speed means, we've got a question about the book. What does speed mean? Well, you have price, right? Which is what's happening in the moment, like momentum in the moment. And then you have, right, so this is price. But you also have market, which is the general, right? It's not where we are at this moment, the price that we are in this moment, but more generally, what is the overall conditions of the asset, right? And so the answer to the market is it's either bullish, neutral, or bearish, okay? But it's not binary, so to speak. Like, you don't have a chart that looks like this, or like this, or like this, right? Like, that's not really what a chart looks like. So when you say the market is bearish, because in this case it would be a bearish market, you can guess because price is falling. But how bearish is it? So the market is falling. Is it falling quickly or more slowly? Because you could be moderately bearish, you could be aggressively bearish. Okay? So that's where you look at things like the 2155. Okay? This tells you the market. Okay? So the speed is what we're looking at now. Not just direction, but the speed. So at this point here, technically speaking, not opinionated, technically speaking, that market is bearish. The angle and separation tells us it's bearish and fast. Here, it's bearish and slow. Okay? Now they're expanding, they're diverging, it's fast. Then it converges slow. So that's how I use that. So the market is bearish, right, and falling fast, bearish falling slow, bearish falling fast, bearish falling slow. That's the difference. Speed is either fast or slow. Now, is there any tool that we could use to help us determine the angle and separation between the 2155? Wouldn't it be nice to have a tool that says this moment here is when it becomes slow? This moment here is when it becomes slow. Is there a tool that we could use to help see that better in real time? We need to somehow have a tool that looks at these two moving averages and tell us if they are converging, like here, or diverging, like here and here. We need something like a moving average convergence divergence indicator. What could we use to do that? Oh, hey, a MACD. That's what MACDs do. Oh my God. That's so helpful. The MACD tells us if two moving averages are moving toward each other or away from each other. Are they diverging or are they converging? There's so many people that use MACD and they have no idea what it does. Isn't that amazing? So when you add my MACD, well, let's do it this way. Let's change the template now to standard. Okay. When you use my MACD, the settings are 21, 55, Are those the standard default settings on your MACD? If you just like throw that onto your chart from your MT4? And by the way, those who said RSI and stochastics, wrong. And yes, they're oscillators, but you don't know what they're doing, so you're not using the right tools. I was very clear on what we needed. So if you answered stochastics or RSI, you're absolutely completely wrong. Yes, they are oscillators. Yes, they will probably work. Yes, they would have similar timings, but the answers are absolutely totally wrong. Okay? So when you typically add MACD, the settings are not 2155A. So why did I change mine to be 2155A? Well, we started with a question. Speed of the market. Okay, so someone read my book that I wrote 13 years ago, and I said, I want to know the speed of the market. Because I'm using tools available to me to separate market forces from price action. There's a difference between price action and market forces. Sometimes they're working together, right? Sometimes they're working against each other. I need to know this because when they're working together, I want to trade like a madman, dropping bombs. But when they're working against each other, I want to go golfing. I want to be a docent at the local museum. Okay? Okay? So, I say to myself, how do I measure market? 21 and 55 EMAs. I just showed you on the charts. And I said, well, it matters if they're falling fast or falling slowly. But falling market is bearish. I don't care. Just by definition, a falling market is bearish. But is the market falling fast or is it falling slow? Should I be aggressive? Should I be conservative? I know I have to be a bear. Okay, but what are the market conditions telling me? Well, so then I said, well, I look at the angle of separation between the 2155. So I need some sort of indicator that will tell me if two moving averages are converging or diverging. That's what a MACD does. So I say, okay, well, I need a MACD to tell me, is the 21 and 55 EMAs converging or diverging? Moving averages converging or diverging? So that's the question. What are the 2155s doing? Are they converging or diverging? And then the next smarty pants is going to say, well, over what period, Wayne? Over 8 periods. So we add that data and there it is. Cool. So you take this, okay? This tells me if the MACD is crossed up or crossed down. This tells me if it's moving back to neutral or not. So MACD is below, or the 2155 is moving down, is crossed down. 21 is below 55. But at this point, 21 is still below the 55, but moving back to neutral. Okay? This is a 21 goes above. I guess I should mark it this way. 21 crosses above the 55. 21 crosses below the 55. Okay? At this point, they're converging again. So this is convergence. This is a cross back, divergence, convergence. divergence, convergence. So let's just take a look. So let me mark this one more and we'll just look back left. Okay? 21 is above the 55, but now they're converging. 20, right? Right? Look at this, just beautiful, beautiful. Now they're, right? Diverging, converging. Diverging, converging. So anyways, let's take a look. Let's do it this way. Just so I'm taking this forward. All right. So this is, so let me mark this one more time so we understand. Okay. 21 in this period here, 21 is above the 55, but they're converging. Here, the 21 drops below the 55, and they are diverging. 21 is below the 55, but they're converging. This is where they kiss, right? Diverging, converging. You ready? 21 is above the 55, converging. This is where they cross. Watch this. You ready? See? I know this because that's what this line tells me. And now here we are. They're converging. I didn't get this line quite right. I didn't draw it perfect the first time. That's actually the cross right there. So anyways, MACD is a very, very useful tool if you know what the heck you're doing as a trader. If you are simply looking at your MACD to tell you what to do, you're a fool. Mama didn't raise no fool, right? It doesn't tell you anything. You have to know what you're looking for. You have to know what it is doing, right? An artificial horizon indicator in front of a pilot doesn't fly the plane for the pilot. It doesn't land the plane for the pilot. It doesn't say, hey, yo, pilot, you're going the wrong way. It just is an artificial horizon. It's just another indicator. It's helpful. Like, how often does a pilot actually look at an artificial horizon? Like, oh, look at this. I guess if you're flying instrument through fog or something, right? But when you need it, you need it. But most of the time, you don't need it. Thanks for subbing, Mario. Yeah, you have to download the one that I give you, Kenny. So let's go back to that indicator. And you go indicator list. You want to use that MACD. 21.55.8. Maybe Google this one. Wow, it doesn't even give you a description. That's weird. Google MACD_OSMA. What's up, Crip? Sure, Joe, but these are helpful if you know how to use them. I'm not saying you have to use them. They're definitely helpful if you know how to use them. And of course, the vast majority of traders, I'd say at least 95%, really have no idea what the math is doing. So they personify them and they say, I really trust my stochastics. I really love my RSI. MACD's just the best. I mean, dude, it's just an algorithm. It works 100% of the time. Now, it might be useless information, but it works 100% of the time, right? I often get that question. Does MACD work? Yeah, 100% of the time. Can you trade profitably? Probably not. Will it help you trade profitably? Probably not. But does it work? 100% of the time. It's math. The math works out every single time. Ugh. Ugh. Ah! Gee whiz. Is it Friday yet? Oh, golly. Looks like a beautiful morning. Looks like a beautiful morning. We should go kayaking, huh? Random question. Have you ever thought about changing trading platforms besides the well, you know, I traded with the deal book forever, and I never wanted MT4. Right? There was nothing that MT4 did for me. And back then it was only like third tier brokers offered MT4, and all the big boys, the top tier, made their own platforms. So every broker had their own platform. And then the NFA went from not regulating the industry to over-regulating the industry and drove out all the top tier and second tier brokers out of business, ran them out of the country. So inevitably there was a change in the industry, and in particular now the global players were the, oh my God, I just saw a bird take a fish out of the lake. That's pretty sweet. So anyways, there was a change in the industry, and international brokers had a sort of a bigger role, if you will, versus big American brokers and stuff like that, running their own proprietary platforms and stuff. And MT4 just started to become almost like from obscure to necessary. Meanwhile, when there was only third tier brokers, it was really interesting because the traders that were using those brokers were much more scalpers than they were investors, right? Which was sort of a different personality of who was trading with these brokers. And they had two things. They had MT4 and they had like crazy, ridiculous, narrow spreads compared to the big boys, right? Because the big boys were full service shops, white glove treatment, big spreads. So anyways, the type of person that went there was also the type of person that would basically hack their MT4 so that every trader using MT4 had like custom indicators and EAs and this, that, and the other thing. And you could customize it where the big boys, some of them didn't even give you the programming language. And like, I believe the programming language for the deal book was CTL or something. It was really hard to find a CTL programmer. So I only had I had my own pivot points developed, and my Fibbits were developed. But it wasn't like easy to get something you can just plug in. So I think I was the only person I knew that had custom deal book indicators. Meanwhile, MT4 was becoming more and more popular because it was so customizable. It was like a 50s hot rod, right? Like there's no two alike. And then all of this kind of just came together where suddenly there were no top tier American brokers. And all there was, so all their proprietary platforms went away. And then MT4, this idea of a fully customizable, open source, if you will, trading platform really was of the time. And then lastly, so imagine me 10 years ago, 12 years ago, I got my 18 screens up. I'm running deal book. I got lots and lots and lots and lots of trades open, dozens of trades. I'm trading so much through GFT that I have my own dealing desk of 2 full-time employees sitting at a desk, and their only job is to clear my trades. So I got a lot of charts open. Well, the way that the deal book worked is if you had the charts, they were running in the background. It didn't matter if you were looking at them or not. So how many charts, like let's say, right? So I got 6 charts on this MT4, right? No. I have this many times 6, let's say. I really have like 100 charts. Well, the way that MT4 works is I'm only running these 6 right now. And there's a bit of a delay. When I bring up this one, it hiccups for a second. Watch, it loads. There. You see, it took a second because it wasn't updating. But when I was running the deal book, it was running all 100 charts at a time. And you got to a point where I think I couldn't get past 60. I think I couldn't get past 60, and then it would just have a heart attack and die because it was just too much a load for the CPU and stuff like that. So all of a sudden, those brokers went away, and the platforms they had were not perfect. They had weaknesses, like the Dealbook 360 was a beautiful platform. It did a lot like what MT4 is doing now, but you have to remind yourself 13 years ago, just being able to switch through profiles like this was radical. It was radical. So Dealbook had workspaces and stuff, but again, it would run all the workspaces all at the same time. And so when the world shifted, suddenly MT4 was the better replacement, and I switched from there to here. Why would I change now? I don't think I would change. It's not perfect, and there's some things I don't like about it, but it's nice. I think there's prettier platforms now, but I don't need pretty, right? I don't need pretty. I need like a Russian tank. It never breaks down. Okay? Does that make sense? Would I change? Why would I change? Okay, let's go back. Let's do, yes. Got a request here for USD yen. Okay. So, do you believe it's broken out of the top end of the range? If so, buy the dip. Yes, I have a question here. Struggling with short-term long and long-term short and all that kind of stuff between weekly, monthly, and daily and all that kind of stuff. I prefer this. You're long every day, every week, every month. If the monthly changes, your weekly changes, your daily changes. I very rarely buy on the weeklies or sell on the daily, that kind of stuff. I used to, but in all honesty, I spend so much time with school that I don't sit in front of my charts 12 hours a day anymore. When I did, I can do that. But now I'm a swing trader, right? So what do you do if you only have an hour a day to trade? Shoot, an hour is liberal. What if you had a half an hour a day? Yeah, I could I can day trade, I can weekly swing, I can monthly swing. Because a day trade is just a daily swing, weekly swing, monthly swing. It's all the same thing. And you don't, even 30 minutes a day is way more than enough. Way more. 30, yeah, 30. If you're trading every day, 30 minutes a day is more than enough. But you could even, I mean, a lot of these things, it's 30 minutes a week. But if you're trading absolutely every day, then yeah, 30 minutes a day. But if you can't even do that, 30 minutes a week, you can weekly and monthly. And so, right, I have more than 30 minutes, so I'm just saying you can do it, right? So, for example, what do you do here? So let's just use this sort of, oh, this isn't the best one. Euro's not a good one. Anyways, yeah, so what I do is I create a bias, and I'd like to trade the bias, the same bias in all three. This is the answer. No. No, I do not believe Europe will cut ties with the Russian energy supply. No, I do not. They cannot. There is no alternative, is the other way of looking at it. So I'm not sure why you're interested. I remember we were talking about it last week. But just do this. Do some research. It won't be easy research for you to do. You might have to go through academic papers and stuff like I read. But just look at Europe's alternative supply infrastructure. Okay? So the first thing you should do is find out where Western Europe's natural gas comes from now. The vast majority of it. Probably 90% of it. Where does it come from now? Like, show me the pipelines. And I've actually seen them on the maps, the pipelines, and where they come from and where they go, right? Start in Baku, baby. Where does that oil and nat gas go? Okay? And then say there's some horrible event, either geopolitical risk or there's a terrorist attack or something. Well, let's just say every pipeline from Russia to Western Europe is destroyed. And it's going to take 5 years to bring them all back online. What would Western Europe do? Where do they get where are their alternative sources? And then go find that answer. And then you'll know. Okay? If I was doing 30 minutes a day, over what period? Like a month? A couple of thousand? I mean, it depends on the time of year. But if you're swing trading, and I don't know how many trades you make either. But yeah, if you somewhere between 1,000 and 2,000 a month, if that's all you had, depending on which month you're talking about, sometimes it would be more. But it's hard. There's no, see, like, if you're doing a mean, a mode, and a median, it's not the right stats. So how would I draw it on here? If we can go all the way out. Okay, see what happens over the summer? See what happens over the summer? See what happens over the summer? Okay, so you get this whole period here. Nothing happens for a giant period of time. Okay, look, it goes down for 2 weeks, and then it goes up for 2 weeks, but on average, nothing happened. So what's the average here? Nothing. Can you make money in here? Yeah, you can make money in here. But if you averaged it out, nothing happened, right? And then there's other times of the year. Let's just kind of change colors. Okay. There are other times of the year then you get this. And of course, actually, it starts down here, right? This starts up there. And they're predictable times. Okay. So average is not quite right. This feeds your family. And I teach you how to do that. Okay. I teach you how to do that over the summer. And then these other periods put your kids through college. They buy you a better house in a better neighborhood. Okay? So average isn't quite right because you're talking weekly or monthly, and I'll say, well, here, you could make, let's say, 2,000 to 10,000 pips in a month. And here, you're trying to make 500 pips a month, right? You're trying to survive. You're trying to make money every day and just put food on the table. We call this eating rabbits or hunting rabbits. How many people here have hunted rabbits with me? How many people have spent weeks and weeks and weeks and weeks hunting rabbits with me? We're eating rabbit stew and roasted rabbit and boiled rabbit and rabbit pizza and rabbit tacos. And all of a sudden you're just so sick of it. But there's nothing else. But you do know big game will return, right? We know big game is returning. So not only are we hunting rabbits, hunt rabbits. Not only are we hunting rabbits, but we're repairing our bows and arrows. We're rebuilding our traps. We're preparing. Yes, we're eating rabbit stew. Yes, we're sick of it, but we're making preparations for the big hunting season. And we're absolutely so ridiculously ready for these moves. It's sickening. And I know exactly what day to stop hunting rabbits. I've actually done it where we come together and we're like, today is the day we stop hunting rabbits. We're going on the big hunt. Oh, right, we're going on the big hunt. Yeah. I know the day to make the change mentally. Okay. So to me, there isn't an average. There's time of year, right? There's time of year. So some months are going to be hardly anything, and other months are going to be unbelievable. So if I said to you, well, you should be averaging 2,000 pips a month, you're like, oh my God, that's a lot. Well, it won't seem a lot when in October and you make 8,000 a month. But then in July, when you make 500, it sounds impossible. Well, it is impossible in July. So you shouldn't be using those types of means. What's average? Because that doesn't make sense almost ever. So in July, if I said you should average 2,000 pips a month, you're like, man, in July, I basically broke even. So what do I tell you? That's bad? And then in July, you make 2,000 pips, but everyone else made 8,000 pips. I'm like, should you be happy with 2,000 pips? No. So either way, it doesn't fit, if you understand, right? Nobody cares about average, right? Nobody cares about, there is no such thing. It's such an abstract, false reality. All right. Anyways. So we did Aussie. Yeah. Okay. Great. Or USD yen. We did the Aussie. What else? I think we looked at Beast already. Beast was doing nothing. Great. Maybe we should move over to dollar pairs. Dollar's been nice and weak lately. I've been super happy with that. So do we have another meaningful vote? like, if you do a lot of meaningful votes, does it take away some of the meaning? But anyways, I'll leave you with that philosophical thought. But this is a sell zone like nobody's business, right? Okay. I mean, that's clearly a sell zone. You don't need to be a math genius for this one, right? So there's that. And this is the buy. This is probably the best buy zone that we have this week. But if you wanted to be a bear, holy schnicker schnocker, an MM3, WM3, double top. Don't get any better than that. Okay. All right, guys, I gotta go. It's been real. Why don't we pick up here tomorrow? Woo! Woo! Why don't we get together tomorrow? Do some more yen, some more dollar, some more commodities. Remember, got Fed. This is going to be great. Very interesting week. Thank you for being on my team. Thank you for subscribing. Thank you for the comments. Thank you for the thumbs up. Thank you for being a client to Trader's Way. Thank you again for your loyalty and respect. Remember, you can download my chart templates for free. My programmer was sick last week, so he's back on the job. So probably in the next 7 days, I'm going to start charging for my chart templates. So if you want them, download them free now. Otherwise, it's going to cost you muy dinero. Okay? You've had 3 or 4 months to download them for free. Enough's enough. So cool. So have a wonderful day. Peace on earth. May the pips be with you. May our profits be above average. And I will see you tomorrow. Don't forget, if you are new, click the Forex.Today logo to subscribe and watch the other 4,000 videos I have associated with me and my work on YouTube, under Trader's Way, under Forex.Today, under FX Bootcamp. It's all there for yours to use for free. Cheers. See you tomorrow.